Ohio. All right, let's get going. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance to lower our risk. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader. Before that, I was a venture capitalist. Before that, I was a high-tech entrepreneur in the Silicon Valley. I worked at companies like NASA, Cisco Systems, Apple Computer. Yep. Before that, I was in the nonprofit world. Yep, very cool. So here I am. All these years later, I've learned a few things, and I'm here to share. Let me know how I can help. Darko says sound is low for the disclaimer. Let me go back to that then. It looks like it's maxed. All right, and I go back to here. It should be about the same. It is low, huh? Huh. I don't think I can do anything about it. I don't know why it would be different. Oh, it's always like that. Yeah. All right. Performance mode, disable performance mode. I don't know. Yeah, it doesn't seem like I can adjust it. Anywho, yeah, I can see maybe it is a little bit lower, but can't do anything about it. Interesting. All right. Oh, wait. Yeah, that's what it is. It's using my webcam. All right, good. Thank you for that. Let me fix it. Un momento, por favor. Delete. Oh, yeah. Now you're going to say, damn, boy, that's some good mic action on the disclaimer. Huh? In sooth, I know not why I am so sad. Yeah? Cool. Blame it on the Wayne. Yep, cool. All right, well, thank you for that. Thank you for that. Appreciate it. So let me know how I can help. I'll let you be the guide. I am a servant. I'm here to serve you. Honestly, I mean, truly, that's truly it. So let me know how I can help, and I'll do my best. Over the years, I've been asked for various forms of assistance. So I wrote a book many years ago. It's aight. Would you please leave a review? The link to Amazon.com is in the description below. I assume you already have it. So if you can leave a review, I'd really appreciate it. That'd be great. And I am in the process of writing a new book. I'm going to try to find time to fly to Cuba to write at least the opening intro. I think that's going to be super cool. So anyways, if you can leave a review on the last book, that'd be great. Strategic and Tactical Forex Trading. It shows just exactly how I have always been a trader. Strategy first, then tactics. Makes sense, right? There's also a community that I built almost 20 years ago because I was bored and lonely. And actually, the major thing that happened was I had quit my job as a venture capitalist, and I had been working in my home office for some period of time. And the loneliness and isolation actually got to me because I was trading through the middle of the night. So it was very, very, very dark and lonely. And I ran into a dark period of poor trading performance. I think just my psyche got me there. And so I had to kind of retreat, like literally, but figuratively as well. And I asked myself, because I had been, I don't know, blessed, I guess, with some fair amount of success a couple of times in my life before Forex. And I asked myself, well, what did I do before that I'm not doing now? Like, how come I'm just tasting failure now? It wasn't really failing, but yeah, it was. I was on my way. Things were bad, right? It was a bad period. And I'm like, dude, so what do I always do that seems to lead to success? And I realized I surround myself with like-minded, successful, driven, focused people. And I'm like, oh my God, I can't do this alone. So thank you for coming on this journey with me. Thank you for that. And I started FX Bootcamp. Last night in FX Bootcamp, I spent the bulk of the time talking about the end of yield curve control. We actually pulled up the Bank of Japan website, checked all the press releases. It hadn't come out yet. And the last remaining remarks, as I said goodnight, is like, be ready. Okay. Tim, talk to support. Okay. Talk to support. So anywho, yeah, so good. And we got hit by a change in yield curve control, and we were like absolutely, totally ready for it. Ahmed said, why did I feel the need to quit venture capital? I was reading an article, and it was Architectural Digest magazine. Okay. And there was a Forex trader, some kid, who had his brand new apartment featured in Architectural Digest magazine. So it talked about, because it was just a shell when he bought it. It was completely gutted. It was just I-beams and concrete. And so he had it all beautifully done. And he was roughly my age. And I'm like, dude, I'm only a venture capitalist. I felt so bad for myself, right? This kid bought something like, let's just say it was a $16 million apartment and spent, $5 or $6 million decorating it. And so at the end, it said he was a currency trader, but it also said that he was doing, he had bought an apartment a few, let's say 5 or 6 years earlier on a much lower floor. And then he sold it and bought one at a higher floor, sold that, and then bought this one at even a higher floor. I'm like, this kid, this, 25-year-old kid is dropping 20 million on his apartment, and he's a Forex trader? Like, what the hell is a Forex trader? And that's how I found Forex. What the hell? And so I look at it, I Google it. Even back then there was Google, but I might have used Ask Jeeves. And I'm like, hey, Jeeves, what is Forex? And they said it was a $2 trillion a day market. I'm like, there's no way that's true. Turns out it was true. At $2 trillion a day, and I'm a venture capitalist looking for a $100 million market annually, not daily. 2 trillion a day compared to 100 million a year. It just honestly, Ahmed, it just blew my mind. It just absolutely blew my mind. So I had just been promoted to the vice president of the firm, and I'm like, I quit. Take this job and shove it. Okay. So yeah, isn't that weird? Just sort of like, oh my God. So I was smart enough to go where the money was. We all know that that's what you're supposed to do, right? Go where the money is. Oh my God, $2 trillion a day. Now, it wasn't actually that quick because I traded on a demo account for quite some time. But, oh my God. Okay. Happy Christmas to you, sniper. I really want to visit the UK very, very soon. I'm going to wait for warmer weather, I think. But I don't know. I want to go to Savile Row or Jermyn Street, hang out in Mayfair a little bit, St. Germain, or St. James's. And of course, right there on the mall, I think it's called, is where the Oxford Club is. And that's where I stay now when I'm in London. So yeah, man. So you're in the UK. I hope we get an opportunity in 2023 to meet up. All right, so join FX Bootcamp, everybody. I priced it at $88 a year so that you join. Okay, now if you're in a financial situation or a mental situation where you're not going to pay the $88, then I literally can't help you, except for these free live streams. Cool, so that's why I price it for free here. But if you want mega more help, fxbootcamp.com. And then, look, there's a link in the description below to a trustworthy, ethical foreign exchange broker that earned my loyalty and respect over 8 years ago. You need a broker. I think you should open up a demo account today and see if they can earn your loyalty and respect as well. Tradersway.com. Try them. Literally, you should go open up a demo. Start there, and then fund a live account. Let's move away from YCC. Let's do the indices. And then I'll end the poll. There you go. Ahmed said, I think I found it hard to give up a career dream and do something independent. Yeah, no, it was a big deal, Ahmed. It was a big deal. I had always wanted to be a professional investor because being an entrepreneur is a tough gig, man. That was a tough gig. But I made my way and developed a lot of connections in the Silicon Valley and had some success and all that kind of stuff. And I really liked the process. I would, in the morning I'd sit down at my desk. I'd get to the desk and there'd be typically 4 folders on my desk. And these were the files for the entrepreneurs I was going to interview that morning. And the files were thick with like market research, maybe material that the entrepreneur had sent in earlier. We had printed out their patents. If there was a prototype, maybe I'd have a prototype in the corner of my office somewhere. But I didn't know what was in the folder. It's pretty cool. Now, I had some specialties and stuff, but each folder was some new amazing idea to change the world. And I'd sit down and I had meetings scheduled that day to interview these entrepreneurs. And so I'd read through the patents and sip on a cup of coffee. I'd play with the prototypes. I'd do some Googling and all that kind of stuff. But then my morning always started with, then eventually I'm on the phone with the entrepreneur. I'd spend probably an hour just talking with them. What's going on? What's the idea? Think of it as almost like Shark Tank without being stupid. Okay? But it was really cool. Like, it was really, really, really cool. Very often they were dead ends, but sometimes it was pretty serious. And, I'd end up flying the entrepreneur out to our office and all that kind of stuff. And, review boards. And man, it was killer. So to give all that up to be a Forex trader was really something else. Liam has no money. Well, in this case, Liam, this is a sport for kings and queens. So money is your product, money is your service. So if you don't have any money, you need to then get money. So there's a lot of services out there to purport, they say they give you money. I'd be very careful about that. I think what you should do, Liam, is spend the next 5 years becoming a master of this industry. Just like going to university to become whatever you're going to become. If you're going to be a journalist, go to journalism school. If you're going to be a business person, go to business school. Learn accounting and finance and economics, right? If you're going to be a doctor, go to medical school. If you're going to be a lawyer, okay, go to law school. If you want to be a Forex trader, join FX Bootcamp. And it's really, 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 really cheap. So I'm not saying that so I can pocket your money. Okay? It's tiny compared to everybody else. Tiny. But here's the thing. I want you to come out with a skill, Liam, because you're going to become a money manager. And over the 5 years as you learn, you should, at some point, once you've developed a little bit of skill and you can actually trade profitably, you should develop a 2 to 3 year track record of success. And then money won't be far behind. You'll be able to show that to somebody and they'll be willing to take a risk on you. Now you trade that for a year or two, more people will go with your program. And after 10, 15 years, you'll have no money problems. You'll be able to raise money. In particular, in down years like this, it's the best time to raise money because all the other, less good investment choices are getting punished in this down market and probably going to get punished a lot more in the near future. So what happens is investors withdraw money from those asset classes and they seek what works better, something that's profitable, something that has better liquidity, something that has less volatility. And of course, that's you. Okay. Med says, what if you're 40 and you have no money? Well, you got to then giddy up. Okay. Your 3 years, your 3-year track record should have started 3 years ago. Okay. You got to get there. You got to start. The thing is, you got to start. Okay. Yeah. So you're lucky to start while you're still, in those years. Yeah, you're lucky. Okay. Now, the other thing is there's a lot of programs that you can enter to help borrow. It's never been easier to borrow credibility. And what I mean by that is, okay, I did go to Harvard and get 2 degrees. That's difficult. But then I signed up for a course at MIT. What was the entrance requirement for that? Money. It was what, a 4 or 5 month program. Now I'm very glad I did it, and it was very interesting. And Gary Gensler was my professor, so that was really cool. But ultimately, I'm pretty sure anybody could have taken that course. I don't remember a requirement except money. So all of a sudden, so you don't get to put like you have a degree from MIT, but I have a certificate from MIT. And people are like, oh, you studied cryptocurrencies at MIT? I'm like, yeah, biatch. Right? So you're like, all of a sudden that gives me some level of additional credibility, right? Well, you could have done that. And then I did another course at Oxford. Great. What if I had done, I had looked at a real estate course because I studied real estate a couple of, at least 2 classes, maybe 3 classes at Harvard on real estate. The London School of Economics has a program, and I thought about that and hummed and hawed about it, but never really did it. But once again, you could just do that, right? You see, like it's never been easier. In the past, you imagine if I had to like move to London for 6 months to take a course at the London School of Economics and come out with some piece of paper that says I studied real estate at LSE. Well, that would have been very expensive and time consuming and difficult. But now you can do a lot of that stuff, and it's somewhat helpful. I don't know how helpful, but it doesn't hurt, does it? So like, this is a great time to become an expert. It's never been easier. It's never been cheaper. Okay. Like some of the classes are like $4,000. Okay. Now you might say, oh my God, $4,000. Well, yeah. Makes $88 a year seem silly, right? Now, Kevin says you watched Gensler's Blockchain MIT Open course a few years ago. Yeah, 30 free lectures on YouTube. Very interesting. Great. The thing is, you don't get bragging rights. So yes, you can know it, but what do you think people care about? I mean, yes, you know it, but of course, I've done the same thing. I paid the $4,000, and I actually have MIT on my LinkedIn profile because I actually have this certificate. It's one of those things up there. And I can legally and ethically and responsibly and all those things say that I did a course at MIT. So anyways, right? But that's the thing, right? No bragging rights here, but what do we need? So the question, we got a young gun here, and he's like, how do I get to the money? Well, first you got to have the skills, but then the next thing is you got to convince somebody to take a risk on you. Okay? Why should they take a risk on you? Well, you went to Timbuktu University and got a journalism degree, and they're like, I don't know anything about Timbuktu University. It's meaningless. Great, you have a college degree. So does everybody else on the planet, right? But then you're like, no, I went to MIT. Okay? And a lot of people have asked me, does it, I don't know the phraseology of the question, but like, did it matter that I went to Harvard, that I have an Ivy League degree? I can tell you a real world example, and this is absolutely true. When I completed my bachelor's degree, I put on my LinkedIn profile that I have a bachelor's degree from Harvard. 3 days later, I got a call from one of the probably the largest regional bank in this part of the United States. And they asked me if I would be interested in being their foreign exchange managing director or whatever it was. And it just blew me away. Within 3 days, I get the call. They called me. Holy crap. So I can say it does matter. So if you can, for just a few grand, borrow some credibility from like Harvard. Well, yeah, Harvard probably has some sort of Harvard X type thing. You might be, Oxford, London School of Economics, MIT, something. Just you can borrow some credibility, and you put that sort of as a badge of honor, because when someone is thinking about giving you money to trade with, they're like, what's the likelihood this person is full of crap? And anything that shows that you can start something and finish it helps. Right? That's really what it comes down to. And yeah, I think the name matters. It does. I know it does. So that's what I would say to you, Liam. Get real skills, develop real knowledge, borrow some credibility from somewhere, and you'll be well on your way. In 5 years, you'll be well on your way to being investable. Okay. There's a program now and at Yale. I'm not going to go, but I have an opportunity anyways. But Yale has a new program. It's a master's degree in money management, financial management, money management, basically, literally being a money manager. So I can't remember the actual title, but a master's degree in financial management, preparing you to manage other people's money. It's a 1-year program. Okay. You become an alumni, right, of Yale with that master's degree. It's only $108,000. Would it matter? Yeah, it would. Yeah, it would. You know what? Damn right it would. Okay? You could spin that into $1 million. Okay? If you had an education level that was not like Ivy League, you went to a good, an average school in an average place, people go, oh, you have a college degree. That's great. If you studied financial management and had a master's degree from Yale, would it matter? Yes. Doors would open. Money is more likely to roll in. It wouldn't roll in because of it, but people wouldn't avoid investing in you because you don't have it. You see, it gets you onto the short stack. And is that worth $108,000 for almost everybody on the planet? Yes. You want to be people are thinking about hiring you as a money manager? And you have a master's degree in money management from Yale? Yeah. Yeah, you're right in that short stack, I'm telling you. You got a real shot. 99 other people don't. So, that's what, right? Okay. So anyways, good question. All right. Yen is strong. That's an adjustment in yield curve control. I actually haven't pulled up the press release yet. But less than 12 hours ago, I was already on the website discussing it. Let me bring it up. Oh, they didn't they didn't do it the way I wanted them to do it. That doesn't look like the thing I want. Oh, modification. Oh, here it is. Just reference. That's it. Ooh, wow. This is different. Who did this? This isn't the Bank of Japan. Oh my God. I've looked at hundreds of things on the Bank of Japan. I've never seen anything like this before. Very interesting. I'm going to have to go through this, okay? We encourage a smoother formation of the entire yield curve. Okay, here's the big thing. They went from 0.25 all the way to 5. Okay, amazing. It's really, truly amazing. So they're going to purchase JGBs every business day through OMOs, open market operations. I know it doesn't say it here, but that's what it is. So anyways, that's interesting. Who the heck did this? It's terrible, but it's also extremely unusual for the Bank of Japan. Huh. I mean, literally, this is what I expect from the Bank of Japan. Or this I expect from the bank. Oh, I guess that's the same one. Right, this is what I expect. So I've never seen anything like this. I guess it's from somebody's slide deck. It's terrible, though. Some PhD with no taste, huh? Huh. Well, anyways, interesting. I'm going to save that. Thumbs up. Okay. Grind says, I was 2 weeks early. How convenient. What were you 2 weeks early on? Take a look around the world. We'll do commodities. Sir Wayne, will I be a bad trader if I buy pound yen due to the interest rate differential? Well, if you want to buy a falling knife, that's your decision. Oh. Well, but why would you say 2 weeks earlier? You were 2 weeks early. What would make you say, so 20th, 2 weeks? You know, why would you say December 6th? What made you 2 weeks early? Like, how'd you get to the conclusion of that's when? I'm interested in that process. And then I'll show you how I made my conclusion, and then it'll be great. I mean, should be informative. The obvious? What's the obvious? I don't know. If it was obvious, I wouldn't be asking. The monetary policy meeting, for example, or the Fed. Like, honestly, I don't know. Talk to me, Goose. Man, this stuff's important. I mean, I'm telling you, this is so much more important than a moving average crossover. So I hope to learn as much as possible what you know and what you don't know. And Remember, there's no good or bad, but I really want to know the process of making the decision, and then maybe I'll show a different way of doing it, and then you can compare and contrast. You can love it, you can hate it, you can whatever, but let me know, how'd you get there? I don't know what the obvious means. A little bit of rally here in the stock market on the fiver. I don't know if I agree with it, but it looks, we're at a shorting price. We'll on the medium term. There we go. How about they lag behind every central bank in raisings? I don't know much because well, that's not what I'm trying to say. I'm just asking, like, how did you get to the decision of early December? That's all. So I'll show. Look. Let me ask you something. How many people here heard me say, I don't know, many times, that it's December 20th? How many people here heard me say multiple times that it was December 20th? And then I'll show you how I got to that conclusion. Otherwise, it's just some BS guess, right? Who cares, right? And of course, this would have been through the swing trading group, the day trading group, maybe even here. Okay? And quite literally hours before this, we're on the website looking, we're ready for it. We're talking about it. Okay, quite a few people. Okay. So being right to me is not what I'm trying to get to. What I want to get to is, how did I get to that conclusion so that Grind, for example, could add that to Grind's process of fundamental analysis. So we got to go all the way back to announcement right here, November 29th. And there we go. Fixed income purchase operations of the 10-year JGBs will be conducted for consecutive days through December 20th. That's as factual as I can get. And we've been watching that. I've been watching that and discussing it and showing people this, weekly, for example. And this was 25, and they now changed that to 50. Okay? Interesting, right? So that's how I got to December 20th. As factual as I could be, non-opinionated. Darko's like, yeah, FX Bootcamp's cheaper than Harvard. Yeah, I can't remember my classes. What were they, like $5,000? And I took like 40 classes. More than 40 classes. Oy vey. Yeah. Yeah. Yeah, well, there you go, Grind. Like, again, I'm not trying to say you're wrong, I'm right. I'm good, you're bad. It's more like this is part of what I do on a normal, regular basis. I read things at the Bank of Japan, at the Bank of England, the Bank of Canada, the Bank de Mexico, okay? So on and so forth. And the information's there. Like, that's pretty factual, right? So again, think of it. I had a whole discussion last night about it because, well, last night where I sit, it's December 19th. But in Japan, it was early morning. It was like 3 or 4 o'clock in the morning in Japan. And I'm like, well, today's the day. Yeah, bless the books, right, Johnny? Well, how about living there for months on end? Yeah. So anyways, so that's all. That's all. So it's part of the process. It's part of the process. Dan the man says, so what does that mean? Are they trying to weaken the yen? They're allowing interest rates to rise. Okay? And that would strengthen the yen. How does the big hedge funds reward if traders come up with a model? Yeah, first of all, there's going to be some sort of basic salary and some, bonus at the end of the year. Yeah. Okay. You got to understand, hedge funds are performance-based. Everything's performance-based. Okay? Your last year's number one trader, good for you. If you underperform, you're fired. Get the F out. It's a very alpha male world. It's very, very tilted towards men. They're mostly men. And they're mostly really A-type driven, competitive, a lot of athletes, a lot of military, people that are incredibly focused, incredibly disciplined, incredibly competitive, and you have to produce. So it's like, okay, you get a $100,000 salary, but if you do your job, you're going to make $10 million. Okay? Yeah. Well, it comes down to the manager will make that decision on who gets what. But imagine, I'll just throw down some random numbers and we'll see if it makes any sense. Okay, so let's say we'll make it simple. There's $100 million. So it's, and by the way, that's tiny. That doesn't even register as a real hedge fund. But okay, you got $100 million and you have a 20% year. Okay, so what? There's 20 million. Okay, of that 4 million goes to the fund. Of that, let's say, I'll just say 1M goes to the managers, 1M goes to some operation, and there's 2M that could go to a pool, a bonus pool, for example. It's kind of like that. I mean, there's more complicated ways of doing it, but that's one way of looking at it. So you might have 10 traders and they all get $200,000 bonuses. Or what do you do if one trader got 50% of all the money? Well, then give them $1 million and then the other 9 split the other, you know? You could do it performance-based. Everyone's return is based on how much of the 20% they contributed. But also you got to understand that as a manager, you're not trying to create a community of risk takers that will risk client money so that they can get a big bonus. Because then what you have is a bunch of degenerate gamblers that are trying to steal from the bonus pool, essentially, by cheating and breaking rules of, degenerate gambling as a form of trading strategy, right? Bet big so you can win big. And if you lose, you get fired. Well, but dude, somebody loses the big money, right? So you have to make these decisions like, how do you manage your bonus pool? What kind of trading desk are you trying to create? Trading culture, for example. So you might reward not absolute return, but maybe the best risk-adjusted return. So you reward based on, first and foremost, the percentage being based on maybe a Sharpe ratio or something, where you're trying to not just have an absolute return from a degenerate gambler taking big risks, but maybe you're trying to reward the one with more consistent returns with less volatility. So you do Sharpe ratio first. Organize the bonus pool by Sharpe ratio, give them some sort of percentage, and then look at the absolute return after that, and then break it down. You can make it quite complicated. You could almost think of it as a cap table on venture capital. You guys know how to do that? I'm not going to explain a cap table now because, you could spend 6 months studying how to do a cap table for venture capital, but you can think of it that way, where some people might have larger shares of that 2 million based on all kinds of things. It could be seniority if you wanted it to. It could be better risk-adjusted performance. It could be absolute returns. It could be their contribution to their 100M, or just there's all kinds of things. But the bottom line, you're asking me, if you bring in a model that's contributing to the positive performance of the fund, would you be compensated for it? Yes. Because that's all the fund is trying to do, alpha. And if you bring alpha to the table, you will get paid, for sure. Okay? Okay. Inderdeep says, hey, yen up, dollar goes down. Not necessarily, but the yen is strong. It could look that way, but not necessarily. Okay. What are the impacts? Will the U.S. go into recession? But we already know that. Or you should already have an assumption. Will an adjustment in yield control put the U.S. economy into recession? In my opinion, we're already going into recession. So I think it's the other way around, Inderdeep. I think what the Bank of Japan just told us is the Fed's going to jack up interest rates very high. But I've already positioned my portfolio over the last 4 or 5 months, really even going back a year. I've already positioned my portfolio for that. So it's not like this occurred, so now these other things are going to happen. No, this is all part of the process. This is the Bank of Japan preparing for the United States recession. Yeah. What's the major consequence? Well, let me ask you. If we look, because remember, don't take my opinion. Let's just look at the facts. That's all I'm trying to ever share. So we'll pick on, which one? CAD's a great one. Okay, great. CAD's a great one. Okay. Right around here, Japan allowed the interest rate on the 10-year JGB to double. So you tell me, what happens to the Japanese yen when the central bank raises interest rates? Okay. Oh, great question. Let me get back to the oil one in a second. Okay. But I want you guys to answer this. Don't take my opinion for it. Okay? What happens when the Bank of Japan allows interest rates to rise from 0.25 to 0.5? Strengthens. Done. Okay? If they do it again, I would expect the same thing to happen. Okay? They're allowing money to return. And you can see this is following the risk on, risk off model. Okay, this rollover is to risk off. And yeah, look at that. It even stopped at the MS2. Isn't that nice? So now you have to decide. Somebody said, hey, they might want to buy one of these things. Okay, yeah, you could. But you know what's lacking? Why? And most likely a response will be, well, there's, very often there's snapbacks and all these different things. But it's hard to write a story about that. Like if I asked you to put a thesis together, a 3-page thesis, I don't think it would be very compelling. If you're like, why should you buy this? I mean, but look, you could, you could, for sure. But the thing is, you're going against everything that just happened and announced. So you're buying a falling chainsaw, and I'm aware that this could go all the way back. I'm aware. But why do you think it would? Okay? There's also a high probability of something like this. Okay? So, which one could you write a thesis about? Okay? CAD yen retesting 100 and then you're selling? We're buying the dip and reversing the entire market in the face of interest rates doubling in Japan. Like, okay? I would not like it. If you traded for me and you decided to buy here, you know what? I'm not saying you're not going to make money. You probably will make money. But I'd probably fire you. Okay, because what you're picking up is high risk, high volatility type trades. And I'm trying to lower the risk and lower the volatility. You see, as a manager, so if you're a trader and I'm the manager of the fund, I would look at you and go, oh my God, you're making an absolute return. Okay, absolute, which means you are making money. So you scalp it off the bottom here and you make some money. Okay? But you are also bringing to my portfolio risk and vol. And I'm trying to kill risk and vol as a manager. I'm trying to get rid of this and get rid of this because it's not in the best interest of my clients. It might be in your best interest because you're taking big risks to get big rewards because you're going to get a big fat bonus at the end of the year. So that's in your best interest. It's not even your money. Okay? But it's not in the best right, for my clients. It's not in the best interest of my clients. And I'm the one that have to look them in the eye when we have dinner or we're flying on their yacht or flying on their yacht and sailing in their plane. But I have to explain to them because, and you're like, but dude, what's the big deal if you make money? They already have money. Okay? You have to understand that. They already have money. They don't want risk. They don't want volatility. So you have to have, okay, a risk-adjusted performance. Okay? So you have to take this and then adjust for risk and vol and look at this new return. And the absolute return isn't the number one focus. Okay? So it's easily possible. Okay? So the best way of looking at this is a Sharpe ratio. It's only the first step, but it allows you to compare currency trader versus currency trader versus currency trader, or currency trader versus futures trader, or currency trader versus stock trader, or currency trader versus apartment building. Now, it's weird if they all have different levels of money and different returns, right? This one makes 12%, this one made 32%. Do you understand that at some point you want to try to, at least as a first step of comparison, try to get it down to apples versus apples, or bananas versus bananas. You get that point? So that as an investor, you can say, oh, well, should I invest here or should I invest there? So very often, almost 90% of the time, I look at a profitable trader and I see a Sharpe ratio of 0.25 and I pass. Oh, but they're up 15%. Not interested. I don't even care. It's irrelevant. They take more risk than they're rewarded for. I will not be compensated. And at some point, right, you would assume that even though this is a good trader and they're profitable, I'm not talking about profit, I'm talking about risk-adjusted profits. If things go bad, it's going to be easier to lose money than make money. So it's just not that great. It's just not even that great. And then if I look at a different Sharpe ratio, maybe it's another Forex trader, maybe it's an apartment building, maybe it's a different asset class, maybe they trade energy. Great. And I see 1.25. Guess what? Okay, that gets shortlisted. I get more than compensated. They beat the amount of risk. It's telling me they don't take risk to make money. They have low volatility and they have consistent performance. And I get paid more money than the risk. So that's good. But then when you start comparing, you might find, well, this guy's got a $250,000 account. Do I want to give him $5 million? No. So then you got to say, well, how investable are they? Okay. And very often what it'll be is you might find someone more like, this guy's got 2.5 M, and that's good. Now you look at the third investor, third trader, I should say, and they have 2.25, but they only have 250K. So then you would have to say, well, can they scale? Do they have experience? The Sharpe ratio is too high. Like, they're making a ton of money, but with tiny lot sizes. Like, you might say, well, look, I'm not going to make your fund 10 times bigger and be your only investor, but you might keep an eye on them. It might be interesting, but they might just be too small. You might need to deploy more capital than they can actually receive. And very often as the investor, you have a mandate saying that you cannot be more than 10% of a fund. And so you're like, dude, I can, by my own mandate, I can only give this money manager with the awesome risk-adjusted performance, I can only give them 25K. It's in your disclosure document because you're reinvesting other people's money and you told them you'll never, right? So all of a sudden you're like, you got 250 million to deploy. You're not going to put 25K in this fund. It's just the fees of just auditing these guys and doing oversight would be more than 25K. And plus, you know, what are they going to do? Make 10%? And I mean, there's just like, dude, so you're like, you're back to here. Amazing performance, but the scale is too small. Poor performance. They're profitable. They make money regular, steady Freddy. They have 12 profitable months in a row. They're still not a good investment. So then you get down to here and you got the right scale. Okay, and you got the right performance. And what this tells you is they're consistent, they have low volatility, and they should be able to essentially print money for you. Okay? And that's what an institutional trader is looking for. So if you were to buy here and make money, you might have a good absolute return, but on the long run, it's not what I'm asking you to do. Okay? What I'd rather you have done is sold off the 21 EMA. And then you're like, but Wayne, how did you know to sell off the 21 EMA? That's what the 21 EMA is for. And if you don't know that, you don't work for me. Okay? But this idea of buy it and maybe you get lucky, you'd have to jam your stop pretty quick. But you know what? It's just for me, it's kind of the wrong thought process, but you could do it. You could do it. Here's how you do it. Okay? You got a plan A. So your stop, you want to keep just below that, and you know, and it'll do one of these things. Let's say delete. It'll go okay, and you take it north, you jam it, and maybe you get lucky. Yeah, you know, I'd rather you just understand fundamentals and just trade properly. Okay. But you're right. It'll probably go all the way back to 100. You'll probably make 300 pips. Okay. Do you remember how I taught you in my book more than 10 years ago? Okay. The book says 2155 crosses down, you sell here, or more precisely here. Okay? Because of, let's do this one blue. Because of the blue cross, you take the pink cross down. Okay? And then you kick off the 21 again, which is probably, you're right. But anyways, it's a little tougher here. But I'm sure on a 4-hour you can catch it. But, right, like I'm just asking you to trade like this. I'm trying for you to understand the fundamentals, which means then you need to learn central banking policy. I'm trying to get you to look at longer term charts. I'm trying for you to lower your leverage. I'm trying to allow you to keep your losers small. I'm asking you to let your winners run. I'm not asking you to wait for it to drop 500 pips and then buy it in hopes that you hit a home run. Liam, that is completely worthless. You're good for 30 days. Nobody cares. There you go. You know what I mean? Nobody cares. You don't have a 3-year track record, it don't matter. You were good for 1 month, what does that do me? Who cares? Okay? No. Liam, I'd rather buy an apartment building that produces rent every month. Rather buy a bond that pays me on a regular basis and I get my money back. Okay? So I have to choose between investing in you with no track record or buying BHP Minerals, which has been pulling minerals out of the ground for 200 years, and they're paying me 10% annually. I'm not going to invest into you. I'm going to invest into the 200-year-old company paying me 10% a year, plus asset appreciation. So it's just like, no. You can go to, and if that's harsh, try going to a bank. Hi, I'm young, I'm a kid, I'm still in school, I want to borrow money and invest it in the foreign exchange market. No. I mean, yeah, I mean, it just doesn't make any sense, Liam, right? So I'm not trying to be harsh, I'm trying to cut through the fat and get straight to the point. You're uninvestable now. So this is why I'm like, develop the skills, develop a track record, borrow some credibility. All these things are going to help you in 5 years. But you're good for 30 days? Dude, I can just pull the trigger and have it sit for 30 days. I have a 50-50 chance every time. And see, this is, right? This is where I'm kind of poo-pooing on this. You have a 50-50 chance, let's say, this goes back up. So someone buys it here. But you know what? There's no skill. So to me, it's boring. Oh, you bought it there? Look, I get it. This is a pivot point. Great, good for you. So you're going to gamble. I bet you this goes up from here. It's just not interesting. Understand that the bet is a risk. But if you've missed this, but you prefer that, I'm just not interested. You see? I'm just not interested. I want low risk, low reward, but consistency. Okay? Okay, great. Swing trading is weekly. But there's 2 classes per week. There's one on Tuesday. So today there's a swing trading group meeting. And we call it the Stop, Look, and Correct session. That's at 2 p.m. And then on Thursday, we're going to meet at 4 p.m. Okay? All right, let me get back to the question about oil. If I'm bearish on the stock market, why would I be bullish on oil? Okay. Well, earlier in the year, let's bring this up. Earlier in the year, we were debating, we meaning the market, okay, we were debating whether there would be a recession or not. And it's not that my opinion that matters, it's the aggregate of the market. And a lot of people just didn't think there would be a recession. So anyways, but we wake up and, it becomes more and more evident that a recession is coming. And that's what's bringing oil prices down. Okay? Also, since we had a giant high even earlier in the year, okay, what made oil prices fall, in particular, let's say the summer period to the fall period, there's some seasonality to that actually. But also the United States was dumping oil on the market. Probably in violation of global treaties. Nobody wants to talk about that. But if China was dumping steel onto the global market, crashing steel prices, India and the United States and Europe would be freaking out. Okay? So anyway, so this comes down because the United States is dumping oil. And then we're going through this challenge here in the fall. And the question is the Fed near the end of their policy or not? Is the Fed going to stop raising interest rates? Is the terminal rate 4? Is it 5? Is it 6? Okay. And now we're moving into this next phase where it seems more and more likely the Fed is going to continue raising interest rates. That's going to slow not just demand in the United States, but the demand globally, demand for energy. And that is demand destruction. There are two things that you need to analyze when doing a commodity like oil. Okay, demand, which is this downward sloping curve, and supply, which is an upward. Okay, so right now we're having demand destruction. So you shift your curve here to D2. D2. That lowers your equilibrium price. Okay, so this is price, this is quantity, and the price falls, okay, from P1 to P2. Okay, great. So at some point though, at some point in the next 12 weeks, 24 weeks, okay, in the next 3, 6 months, 9 months, at some point in the future, demand will stabilize at this lower area. It'll just be the lower price. Oops, didn't mean to do that. Undo, undo, undo. Okay? And we just stabilize. And then we're going to find out there's a new problem. We don't have enough supply. And now we're going to go from that equilibrium, and then price goes back up. So that's my longer term take on this, where we're in demand destruction right now, shifting the demand curve to the left, right, down and to the left. And some point in the future, we will be shifting the supply curve up and to the left. And it's our job as macroeconomists to figure that out. Now, to do that, you need to pay attention to the central banks, market expectations, economic data, and seasonality. So right now, I would guess that by the end of the first quarter, I'm a buyer. Okay? Now I want you to think about this. Let's say it's the middle of March, and I'm thinking, yeah, by the end of March, I'll probably want to buy. And I get a pattern like this: higher high, higher low. Do you think I will fire for effect? Yeah. So my job is to know. And by the way, I'm doing a presentation on this, but to know what to trade, why to trade it, and when to trade it. If you knew what to trade, why to trade it, and when to trade it, do you think you could do better than just randomly sifting through 35 Forex pairs a day, trying to find the latest 5/8 cross? Huh? Without a doubt. Yeah. Well, here's the thing though. Many people though, Kevin, would say, No, I can't help them. And nor is it my responsibility, right? It doesn't matter. If you think no, perfectly fine. Now, I would disagree. I spent 20 years trying to figure out this Forex puzzle. I got to this conclusion probably in year 2. Okay? But I'll show you guys. I'll show you. For those that are going to sign up for my super secret fundamentally based alert service, in a day or two, I'll be done that presentation, but that's one of the things we're talking about. That's the whole thing. Okay, so anyways, some people won't agree. Everything's in the price. It's all technical analysis. And keep doing that. Cool. So I think that's enough. It's an interesting world out there. Be safe as a trader. Peace on earth. May the pips be with you. May your profits be above average. Don't forget, we have a stop, look, and correct session at FX Bootcamp at 2 p.m. I will meet with you at 4 p.m. It's a busy day. If you had to choose Ryan's class for the stop, look, and correct session. Okay? So have a wonderful trading day. I'll see you at the end of the day. Peace on earth. May the pips be with you. May our profits be above average.